Patience, 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 Saeed. Very important to be a trader, to be patient. Anyway, hi everyone. Hope everyone had a good long weekend. What a day, Friday, huh? So, Alexander, hi. How are you? Jays, how are you? And let's take a look around. So, I want to get to the team in a hurry. First of all, I'd like to point out that there were some great pips by the team on Friday by Leandro. And most of you don't know Leandro. Leandro, maybe you do from Twitter, Lean. And he runs the Spanish-speaking webinars. And Andre, you guys know, and Andre, they both had tremendous pips, pattern and plays that took advantage of a big liquidation day. And, you know, that's a couple of other features you really don't get here in F.A.C.E. And Andre's harmonics are great, and Leandro's a pro. So, you know, this is a tip of the iceberg. So now we have a full month ahead of ourselves here, you know, until, you know, Christmas, New Year's. Good time to get involved with our community in the chat room. So, you know, I just want to talk about one market, and I want to get to the team. And it was oil, and you guys know that I was bearish up here, looking for this speed line to be a magnet with confluence on the 200-day moving average. And I think it's complete. I don't know if it's going to chop around a bit, but, you know, this could just be ABC, and this could be the level that if we are going to get a rally to new highs, could be from here. So that's what I wanted to talk about. Also, I want to say hello to everybody. How you guys doing? Ryan.
Morning, Dale.
I know you're here. You know how they always ask you, you know, what were you doing the day the U.S. landed on the moon? You weren't doing anything because you weren't born yet. All right, you were. So anyway, you know,
swimming around.
I don't know. You weren't even an idea yet. So yeah, I'm wondering how you handle a day. First of all, I know, you know, it was a holiday. Were you paying attention Friday morning? I mean, I slept in and then woke up and just had a wow. So,
yeah, no, I was having a mini holiday myself because I was supposed to be in Austria last week.
Right.
But COVID
lockdown.
Put the pay balls to that. So yeah, I was in a pub and in a hotel with a few of my mates. Didn't see much of it, but yes, certainly some moves, eh?
Yeah, so, you know, the key question then is, and, you know, you're not the only one. I think it's kind of interesting how it happened, you know, who decided to make their announcement when, you know, a lot of people weren't looking. Yeah. Europe was looking, though. But what do you do after a day like this when you have candles like this? And I know, you know, you're involved in yen, and that, you know, this is an outside. They're all outsides or expanded ranges, candles that you don't see anywhere on the chart. Do you just have to let the market kind of reset? And, you know, not worry about not doing anything for a little while. I mean, that's what I do.
Yeah.
I can't short the yen here, and I lean towards wanting to buy it for one more shot up, but I don't have as much confidence just the day after a big down day like that.
I think sometimes it's a blessing when you're not sitting through what happens, because you come in with a fresh pair of eyes. And I did that last night, you know, when I come in on a Sunday evening and I start putting up the options and stuff in the chat room.
Can you turn your camera on so we could see what
I've not got it
4-day binge looks like on a trader?
No, camera's not working today, Dale.
All right. But, all right, I'll take it off. So, all right. So why is it a blessing?
Well, because the first thing I looked at is the moves. Looking with fresh eyes. When you're sitting in amid it, you tend to get caught up in it. And I said, right, what's it moved on? It's moved on this Omicron, or what you want to call it. Sounds like a transformer, if you ask me. And then the first thing that popped up on my news feed was a story from South Africa. The doctor who was dealing with all this said that so far the cases have been mild. So I'm looking at this and thinking, right, we've had a big crap out on this. We know we've got vaccines. We know it's going to hit unvaccinated people, but we know we've got measures in place already. We've come through the Delta variant. We've come through all the other crap. We're not in March 2020. It's good mild. So I'm seeing markets that have just crapped out. And so I've just started getting in. I bought some Aussie dollar. I bought some Aussie yen. Just on a play, because you've got that fresh look. You haven't been caught up in it, and you can think, right, this is potentially well overdone, these moves. If it's purely on the Omicron, don't understand it really, but there's no other big news behind it. Has it gone a bit too far? And as I say, not being caught up on Friday and you can get stuff. Why has this happened? And you don't want to trade something. You got it with fresh eyes and think, well, actually, balance it all up quickly, all the news, and potentially there's a chance for a fade. But like you say, I would have loved to have been in dollar yen at 1300, but couldn't get in. Timing, wasn't at the screen or whatever. Decent level. I would have been like to have been in lower down at 71 is a level I had on my chart for Aussie dollar, but wasn't there. So a bit of a chase on that one. But yeah, just oil again. We were talking about if we get a flip out there, and you've been a seller for last 2-3 weeks. That's your candle, isn't it?
Yeah. You know what? Here I have something I have to share, and I know that you're better at it, and Blake's the best at it. He's rarely flat, but I caught some of this stuff, and then Wednesday I said, you know what, I'm going to have a chance to sell it at 80, and the lesson is to keep a piece on. And I heard this from someone, to be there for the good times, you have to be there all the time. So when I have a tendency where I like to be flat for a few days, recharge my battery and stuff, and opportunity cost to do that. So to be there for the good times, you really have to be there all the time.
Yeah, and we said this last week as well, didn't we? If you could trade differently in the US, if you could stay in a short and take bits and pieces off and move your stops around, you could stay in that trade, and you wake up on a Friday and look at that chart and think, thank you very much, and then you hit the close button at the right at the bottom there. But we can't trade backwards, so we can't trade with hindsight. There's going to be plenty of opportunities there. If we see a move back down to those lows and they hold again, that's your signal to jump into longs, perhaps.
I know Stel was looking for a place to get long crude, and I was thinking about you, Stel, when we pulled back to these levels. This is a pretty big support level. You do anything?
It is. Good morning.
There? Yeah, how are you, buddy?
I'm good. I haven't done anything. No, I haven't traded oil. I've been looking at it, but Friday's move kind of scared me a little bit. Question now is, with markets in general, is we read all these things, we hear, we see analysis, and I don't know about you guys, but I'm not a virologist, and the question is, how do you separate what you think is relevant from what isn't, and what's true from what isn't? So you hear all these things, and I'm reading from people who are supposed to be pretty specialists in these things, and they say, look, this new Omicron variant is more contagious, but it has really mild symptoms if you're vaccinated. And so this theoretically should be really, really good, because this takes over from Delta. And if you're vaccinated, then there's really no problems. If you're unvaccinated, well, then, you're risking anyway. But, theoretically, this should be a good thing now. And the markets, on Friday, they just tanked because I'm sure they had flashbacks of, 2020. And everything,
didn't they?
Yeah, exactly, and everything closing down, and the demand going to zero, and oil going negative, or whatever you want. So for me, I'm trying to understand the implications of everything. And as I said before, I'm not a virologist, and I'm trying to understand and to translate this into strategy for trading. And you know, the more I think about it, the more I think that this panic was probably overdone. So
I agree with that.
And what a day to release it when the markets were thin for maximum impact.
Yeah, that's another thing. Is it time? Is it just a random timing? Is it not? I don't know. We don't know.
I know. You know, there are some doctors that say it's does. You know, it's probably, you know, there's going to be debate on until they really have hard stats about what kind of disease it causes. So I've heard the other two. You know, maybe sensational. See, one guy said, "Oh, it's very contagious and severe disease like Ebola." Someone actually said.
Well, yeah,
ridiculous, isn't it? But I think we've got to wait and see how it develops. I mean, the biggest thing at the moment with this virus situation is the vaccine numbers. You know, that's the reason Austria locked down. That's a reason why the Netherlands looking, and that's the reason why Germany's looking at it's the vaccination levels. Case numbers, we can have mid case numbers, but if no one's going into hospital with those cases, then that's what governments are worried about, getting overloaded on the health services. If that's not happening, case numbers don't really mean anything, and obviously the deaths and that sort of thing. But Austria was going into lockdown before Omicron came out. You know, other European countries were doing that. So it's really it's even more focus on the vaccine numbers. And if vaccine numbers start getting up, you know, there was a piece out I saw earlier. You know, New York City is at 90% vaccinated. Wow. You know, and that was a city that was having trouble, and you know, saying we're gonna have to make it mandatory or you lose your job. And it's at 90% now, and their cases are dropping through the floor. You know, and people dying and going into hospital, and that's what you want to see. If you start seeing that, then we're going to see a reversal of this particular risk move. But you know, Japan's panicked. You know, closed all borders. It's too late. It's there. You know, it's in countries. You're not going to stop it, just like you're not going to stop the Delta. But it's if they lock down and how long they're going to lock down for.
And the other thing I was reading about detection and how they are sequencing of all these variants and all that, they say, look, this is not something that they are analyzing everybody everywhere all the time. This is something that they found out, basically, this new variant. And this is already, you know, among us, apparently. So it's not like, oh, close the borders, we need to keep it out. No, it's way too late now. You know, it's
11 countries, 11 major countries have got it.
Yeah.
You know, there was something interesting about the sell-off, and it's something that Blake had mentioned, one of our guests had mentioned, that when we got this sell-off in the S&Ps, there wasn't a big bid in the dollar. Euro actually had a nice little update candle and put in a reversal week. So there certainly was not a flight to the dollar, you know, except for maybe, you know, the yen. You know, normally you would have seen the euro continue lower. So maybe it's a harbinger that when we finally do get a correction in the stock market, the dollar's not going to get the same bid that it used to get during sell-offs.
Well, and hey, good morning, guys. Right. How are you?
Isn't that what you were thinking, Blake?
Well, let's not forget the euro's a funding currency. So, you know, when you get some risk off or you get a little bit of selling, you know, the euro's going to catch a bid. Just from, you know, it's used as a funding currency to buy other currencies. And so the euro is going to, you know, hold its own. I don't necessarily think the dollar is a risk off currency against certain currencies. Like it'll hold up better against the commodity currencies, and, you know, some of the emerging market currencies, it's just going to do worse against, you know, maybe the euro and, you know, in some instances, maybe even worse than the sterling. So it really depends, you know, what is the, you know, how severe a risk aversion type of move is. But I know I heard you guys talking about this whole transformer variant, the Omicron. It's like
Megatron,
transformer. It's like a transformer.
Yeah, it's like a transformer. Like, but you know, I heard you guys talking about the variant. I'm not I think Ryan, you're spot on as far as you got to see how the vaccines affect the variant, but I've heard it's not as it's very transmittable, but it's not as it is not as intense as like some of the other ones. But anyway, I still think what we saw was a liquidity move on Friday, and this is all you're going to see a bounce back probably today, as the market kind of reassesses everything. End
of month as well.
Yeah, you got end of month selling, you got, everything got exaggerated. You're probably going to see some sort of bounce back, and, whether the bounce is sustainable or not, or whether or not the market can shake off this whole Omicron, variant. It probably has more to do with, what you guys already laid out already. So I don't necessarily, and I'm going to take a look. I'm going to show you guys a couple of things that are on my screen because I think are really important. But if you haven't done so already, make sure you guys head over to tradersummit.net and read all like current articles in the morning, like especially go and read like from ideas from Mark Chandler and Boris Schlossberg in the morning, and get a good feel of what's happening just going to tradersummit.net. But I want to show you a couple key charts in currencies that are going to make me really think differently should we see some of these things break. So first of all, you notice I have the dollar Mexican peso up, right? The dollar Mexican peso screamed higher to a point where we squeezed past resistance. And, for a lot of you guys and gals that are in the ForexAnalytix community, we were playing this to the long side. It was like a really, really wonderful trade. It was very easy to identify. I mean, it took a long time to develop, but it was easy to identify because it stopped selling off as stocks were going to all-time highs. And it was actually divergent, so if you look at, what's happened in the S&P here, the S&P as it was going higher, hitting new highs, the dollar MEX stopped going down. So, I mean, it was easy to identify. You knew this was going to be the very easy trade when stocks, came down, and that's exactly what happened. All right. So anyway, you got the dollar MEX pushing up against really key resistance. I think this is and let me go ahead and hide this really fast. This is a confluence of 127% extension of the whole consolidation and a 261% extension of this last, it's actually this last move lower. So that should cap the rally. As long as we stay below 22.15, you've got to be thinking here, all right, stocks are going to brush us off, right? So that's one. The dollar MEX. I think you guys should be paying attention to that. Dollar Norway. This is another trade that, those of us in the ForexAnalytix community, a lot of us were long down here and got long and, traded it right up into, these levels. Now you're pushed up against resistance. This is really critical resistance. As long as we hold below this 910 level, I think the risk is that we come back down here and then eventually break. Now you notice I just wrote, or I just showed you that we're probably going to come down first before moving higher. I believe that stocks are very overvalued at this level. I really truly believe that the S&P probably shouldn't be up where we're at, but that I don't think is going to prevent us near term from bouncing and possibly going a little higher from here. But what I do think is we're going to have a failing rally, or we're going to hit just brief new highs before rolling back over. Don't forget, there's liquidity being taken out of the markets here. So this is kind of was an easy way for the market to just pull back. But I think that what you're going to find going into the beginning of next year is you're going to see stocks are going to really start to struggle up here as central banks start to remove monetary policy or ultra loose monetary policy. So that's why when I look at the US dollar, like US dollar, Norwegian krona, I actually think it's still going to continue to move higher towards some resistance up here, after, having a little bit of a rejection of resistance at first. We're going to eventually break higher and probably test some of this resistance. But first, it's like I use the example of like a castle battling ram, like you're trying to hit the castle wall or the gate, and you just have to hit it a few times with a battering ram before it goes down. It's the same thing here. This is really key resistance. You're going to knock your head up against it a couple of times, and you're going to have to take another running you're going to have to take another run at it before it actually breaks. And that's what I think is happening here. Dollar Mexican peso, like we pointed out. And, this is one that we were just talking about in our chat room, and Amanda picked it up earlier on this little false breakdown. You guys have heard me talk about this like many a times. All right. This is the multi-year, 12-year long trend line. We hit it here. We tested it oops, hold on. I don't want to do that. We tested it multiple times before breaking out. We've come back and retested it on the way back down at 128. And here we are doing it again. So this is really critical support. I'm looking at the euro yen right now, thinking that it's probably going to eventually break lower. But that doesn't mean that it's going to break lower today. We're probably going to respect this 128 level, or whatever the lows were today, 127.50. We're probably going to respect down here and make it back up towards 129, 129.50, maybe even a 130, as we get a risk bounce today. So, I look around and I'm going to just, throw out a word of caution that you got to be really careful chasing risk lower after Friday's move. So, and these are just a few of what I'm seeing. And there's a lot of different, you take some of these cross rates. I'm long euro New Zealand. And I bought this thing, down here at the long-term 618 retracement. And it's breaking higher, and it's up about 300 pips from where I bought it. But, this tells me that, there's still a risk in the markets. But I think that after such a big move, you got to expect some sort of pullback. You got to expect some sort of bounce. And that's kind of what I'm seeing. Do you have anything you want to add here to what you're seeing that's really suggesting that risk might stabilize at these areas?
Yeah, I think the bounces we're seeing so far, like you've highlighted, what happens from now, as you say, is the important part. Let's take the Europe. There's just seeing Poland go into tighter restrictions now. I think there's going to be some economic effect, and that's potentially not going to allow risk to reverse right back up, because we're going to want to see the fallout from all this. But I think you're right. We've got our levels in play now. You've got that top in New Zealand. We've got the bottom in Aussie. All different pairs. Dollar yen, we've got at 113. We've got these levels now.
You're scuba diving again, buddy.
Ryan, you're breaking up, and your internet connection. It's interesting. I'm with a lot of times. I do interviews with Richard Matthews in the UK, and I don't know where he's at as well. But man, sometimes he has some pretty. And then also, now that I'm thinking about it, Mark Randall, I have some pretty tough connections with him too. I don't know what it is with you guys. What's up?
Brexit ruined the internet there.
Third world country out there.
Brexit.
Is this a Brexit issue? What's
I'm
up,
on, I'm on
Ryan?
200. I'm on 200 meg line.
Huh?
I'm on a 200 meg line. It must be you lot. And the technology.
Connected via Wi-Fi, should I guess?
I'm on both. I've got both running.
Sorry, I didn't hear that. You're on what?
I've got both Wi-Fi.
Yeah, I don't know what's up with his line, but anyway, it is a little choppy here.
Coal-fired internet, says Anthony. That's fine.
It's interesting. A lot of people in the UK that I talk to have really shoddy internet. It's like the weirdest thing. How many of you guys are in? How many of you guys listening in are in, the UK and your internet's a little fuzzy from time to time too? Anybody else out there? So it's weird. It is weird. But anyway, so Stelios, do you have anything you want to add to that?
No, I want to wait and see the market reaction today. But one thing I wanted to add regarding the euro is, you were talking about the euro being a funding currency. I have to reiterate what I said last week. The market's pricing pretty much nothing from the ECB. They've been very dovish. They've always been dovish. But look, today we got German inflation. HICP 6% year on year, CPI 5.2%. This is going to start raising eyebrows, and I bet the people at the ECB are not happy. So, we have to expect at some point a little shift from them, which is
or a little shift from the market in expectations, right?
Exactly. So, maybe they will not hike, maybe they will not taper, maybe they won't do anything, but the market's going to price it at some point, even a little bit. So I think the euro is now is now in danger of actually catching a bid at some point.
And thank you, Stelios. Let's not forget too, when I know I just referenced the euro yen, but let's go back and look at the euro dollar. And if you guys were wondering why last week I was buying the euro dollar near 112 or below 112, and I got hit on a bid below, like at 111, I forget what it was, 111 something. I'm buying it because we just retested a multi-year trend line. It's the same thing that the euro yen's doing. Now, will the euro dollar hold these levels? I'm not sure, but I agree with Stelios. The risk here is that the market starts to go, hey, wait, maybe Germany's going to put a lot of pressure on the ECB. Maybe perhaps we are going to see, expectations shift a little bit. That doesn't mean that the euro is going back to 120, as much as a lot of you Europeans would hope that the euro is going back to 120. That may not be the case, but this is ripe grounds for a tactical bounce, right? Yeah. So if you're sitting here after a 618 retracement, you got a move higher, 618 retracement, and you're sitting here trying to get short at a multi-year trend line, the first whack of it, again, it's like a battering ram. You might get a bounce before you eventually break lower. And I'm not sure if we're going to break lower or we're going to bounce from here, but I do think Stelios is on the right track, that we are ripe for a bounce at these levels here. And again, what happens longer term with the euro probably has more to do with inflationary pressures. And I'm not talking necessarily about Europe, but I'm talking globally. Inflationary pressures. Do we have a recessionary period going into next year? How's the market going to take that? What happens with stocks? I think there's way too many variables at this point in time to say, oh, well, the euro is heading back to 130 from current levels, or it's heading to parity. I think there's a lot of variables at play, but I think that you could think near term, over the course of the next couple of weeks, we are in a very, very tricky area. The euro has been an easy short all year. It's not such an easy short at this level. I hope you guys understand that concept, right? But I know that Dale, Mr. Pinkert, you got your finger on the pulse here. Where's the euro going to be 20 years from now? Can you tell me that? I'm joking. Dale, did he disappear too? We lost internet there.
Internet's gone.
I don't know what happened to Dale. Dale, are you there?
Yeah, I was on my calculator looking out 20 years.
I was waiting for the Nostra Pinkert analysis, but
all right, 110 to 220.
Yeah, there you go. I
Years.
think that's a good guess. And look, I was, obviously joking about that, but because I actually do like the handle Nostra Pinkert, but to be honest, just at current levels, it's really hard to try to anticipate how the market's going to take all the extremes that we're seeing, from extreme monetary policy, loose monetary policy for, let's just call it for over a decade, extreme moves in asset prices, and to look around and see exactly how currencies are going to respond. I don't know, but what I can tell you is I think volatility is going to be high, and I think this is the market you want to be in for the years to come. I think the equity markets are going to be dead for the next, probably 5 to 10 years. You're going to have a hard time, making any headway there. But in currencies, we're going to see a lot of volatility. So in my opinion, you guys are all in the right spot. So thanks for being here. Make sure you jump into ForexAnalytix, jump into our community. It's only $1 to try it out. Because we will be running an end of year special for you guys. So that means if, once we do a special and you get special pricing for ForexAnalytix for our holiday specials, you won't be able to try ForexAnalytix to take advantage of the trial. So take your trial right now, get involved, and when this holiday pricing special comes out, then you can take advantage of that. So Steve, Stelios, Ryan, anything else before Dale takes over here?
Yeah, David's not here yet anyway, so he will be here. I'm chasing him down.
What's that?
I'm chasing him down. I'm running him down.
So while we're waiting for your guest, Ryan,
how many turkeys did you eat?
How many? Oh, you know what? We ate 2 turkeys and then free range chicken. So we had a couple. Wow. We had a couple. I ate a lot of food. I'm not gonna lie, and the amount of desserts that we got from neighbors. Oh my gosh! I'm definitely gonna fast for the next week over here. Dale, how was your Thanksgiving, by the way?
Oh, it's very nice.
Good.
Yeah,
was the weather perfect or what?
Yeah.
Awesome.
We have a big range here. In the morning, it's like 35, 40. In the afternoon, it's 79, 80.
Oh, it's great. It's beautiful.
Yeah.
So Steve, Stelios, did you guys have anything you wanted to add to what's happening in the markets here?
I don't know really. Sorry.
You are zero help, Stelios.
Zero help, man. Yeah,
zero
thanks for
help. Nothing. Sorry, guys. Looks like we're still
actually one more thing to add.
Oh yeah.
We've been saying this for weeks now. Look at metals. Risk is rallying back. Metals are doing nothing. So they're still trading very weak. And even though everybody knows I'm a big bull, I'm still not even close to the position size I want to have. So I think there's still a decent chance we're going to retest 1680 in gold, and I don't know, 21 is in silver, wherever that is. But I just want to point out they're still trading very heavy, and it's frustrating. But you know what? It happens. And
they are trading heavy, and you gotta. I'm gonna stand by the idea that as cryptos continue to take away the popularity of precious metals. I mean, that's just going to be the case until you show me that cryptos are obsolete and they don't matter to the markets. I think you're not going to see gold do the things that people anticipate it to do. People looking at gold saying, oh, gold's going to hit 5,000. I just don't think that that's realistic. Let's not forget that gold is at a new all-time high. you know, I mean, as of this last year, you know, following COVID and everything. I mean, gold is not bearish by any stretch of the means, but if you look longer term, I mean, you know, I'm showing you right now, and we could go into, you know, charts when it was, you know, trading at 200 or whatever, or 300. Look, gold is it in all actuality still looks like we're going to be seeing, you know, 2,200, 2,300 in the next couple of years. But, you know, for those people that are anticipating that gold's going to 5,000 or 10,000, it's going to triple from here. Like I said, unless you prove to me that cryptos are just not viable investment products, not to me, you prove that to the street, to Wall Street and everybody else in the financial markets. Once that happens, or if that ever happens, then I think precious metals are going to be able to go a lot higher than they currently are. But you know, I think until then, it's going to be a tough slog for precious metals, right? I wouldn't, and I know, Stelios, you're talking about 1,600 or 1,800. I wouldn't be surprised if, you know, we see 1,400 again before moving up. And
anything's possible, yeah, of course.
Yeah, I mean, look, it's not like, you know, like I said, it's not like the gold's trending lower longer term. I think if you hold gold right now and you pass it down to your kids, I think it's going to make them a little bit of money.
Absolutely.
But, you know, when Bitcoin goes from, you know, 60,000 to 400 million in the next 10 years, you know, what's going to be a better investment? I'm just joking about that. But, Dale, interrupt me at any time.
I will.
Okay. Steve, did you have any views about gold or cryptos here?
Nothing that you want to hear.
All right. So Steve's view is Bitcoin might be going to 0 and gold is going to 400,000. I'll save you guys a click.
Between the two of them, only one can go to 0.
Well,
I'm not saying one of them will. I'm saying that between the two of them, only one can.
Okay, but we're gonna sit here. I'll take a look at. I mean, I'm looking at it. This is a weekly chart of gold from 2007 on, and we can actually go a lot longer than that. But you can see we're clearly consolidating. How do you feel about cryptos currently?
Me?
Yeah.
I think in the short term, we might see more weakness. I've said it before. I personally have yet to meet somebody that invests in cryptos as an alternative to gold. A lot of people are buying cryptos. There's no question about it. And it has become a vehicle of speculation, you know, heavily recently, because we have the markets we have. I don't think there is a person that would have been buying gold and has put that off to buy cryptos instead. I think there are people that might be buying both for different reasons each other. I do believe that in the short term, though, as long as there is a little bit of a window for some more risk off if this Omicron variant proves to be, you know, some kind of a threat for the, I'm not even going to say the economic recovery, because I don't think we have a real economic recovery, but whatever, for the, you know, assumption that there is an economic recovery, then, in my opinion, cryptos can remain in pressure and actually correct even lower. I still think that if you're looking for a correlation, the best correlation you can find, especially in periods of risk off, is between indices, especially the Nasdaq and cryptos, instead of gold, silver, and cryptos. So as long as there is a chance that we're going to see more weakness in equities, I think that in this case, cryptos should act as a high beta and dump even lower. But because I don't think that any risk off is likely to persist for more than a little bit, I do believe that there might be more upside following whatever corrective move we're seeing now.
Okay. Sorry. We're trying to get
Dave in here.
Dave in here, and we're gonna just, you know, I told him to just give him the guest link so he can jump in as a guest, and then we can bring him Thanks, Steve, for your outlook. Cryptos, I'm just looking at Bitcoin here. And you can see the highlighted area at 53,000. If you go, listen to our analysis every day, last week, not here, not the, right here. If you look at our analysis every day of last week, we were looking for 53,000 to be support, and we came pretty close. I mean, we went to 53. What is that? 53.8, 53.9. This is a big support zone. It's a maybe channel resistance. I think if we can get below 52,000, that might open the door for a 200-day moving average test. But overall, cryptos still continue to look decent and perform well. I was actually trying to buy Ethereum as it approached 4,000, and I just kind of forgot about it. Which, but you look at Ethereum, this is obviously a very, very big support. One thing that I have to say about cryptos is they're wonderful trading vehicles. They are extremely good trading vehicles for those of you that
you mean money laundering, but yeah, trading.
Oh,
I'm kidding.
Totally. I mean, if you want to continue to support Somali pirates, it's all yours. Whatever you want to do, but they do trade, and that's the thing that they do is they provide a lot of volatility. The problem that I have a lot with cryptos at this point, they're not, and probably one of the reasons why cryptos have this insatiable bid is because they tend to go higher because they tend to go higher because a lot of traders here in the US, right, they can't short them, right?
David's here.
Okay, cool. So they can't short them. So we don't trade a lot of CFDs, and you have to have a little bit more money to be on the short side, with margin accounts to be trading the short side of some of these cryptos, which is interesting. But anyway, all right, Dale, I'm going to let you take over, and so you can talk to your interview, and have a great interview.
David Hunter.
Thanks everybody for joining us.
Thanks, Blake. Thanks, guys. Thanks, you,
everybody.
Team.
Bye-bye.
David. Hey, thank you, Steve.
Thank you, Dave.
Always good to hear your voice. David Hunter, welcome back to F.A.C.E. Sorry about maybe I sent you the wrong link. How are you, David? Let's see here. Where is he? Hello, David. There you are. Dave, hi. You're sideways like the market was Friday. There you go. Now you're upright. Now you're like the market trying to recover.
Dave, you might have to adjust your microphone.
Unmute. He's muted.
Yes.
Okay.
There you go. Hey, David. Sorry for.
There you are.
Maybe I sent you the wrong link initially, but I did want to talk to you. Welcome back to F.A.C.E.
Yeah. Thank you, Dale. Glad to be here.
Appreciate you being here, and we were talking just a week and a half ago, and you said you started to feel uncomfortable. You had too much company, too many people embracing the melt-up scenario, and you talked about that there could be, something like a 5% sell-off, and when people saw you post that, they thought you meant in the next 5 minutes.
Right, exactly.
Right. So it took a couple of weeks to unfold, but boy, did it unfold. I didn't think it was going to happen in a day.
Yeah, we had a little help from Omicron, but I think it was going to happen anyway. So, and people think it's a one-day wonder, but I look at my work and it tells me we're probably halfway through a correction.
Okay, halfway through, because I was going to ask you about that, because one day probably would not be enough to shake out people still looking for a melt up. So do you think we've done enough on price? Because when you and I were talking last week, I pointed out prior highs, and we didn't quite get there in either the S&P and NASDAQ. In fact, NASDAQ could break another 500 from here for previous highs. So, yeah, how long do you think this process takes before we start heading back up? Because I know you're still looking for higher highs.
Yeah, well, after Friday, I'd say if we get a couple more days like Friday, we've done it, but it probably, as you know, it's not unusual to see the first 10 days of December kind of soft, or certainly the first week or 10 days. So we could take, a couple weeks from here, might get done in a week. Who knows? But
could it be could it be a 10% pullback, Dave? Is that what you're saying? We could have more?
Certainly in the NASDAQ, I'd be surprised if it gets to anything close to 10 for the S&P. I still think it's probably on the order of 5 or 6% for the S&P. So, I'm kind of targeting the 44.50, 45.50 level, and more likely, just below 4,500. That gets you back to the trend line from March 2020, I think.
Okay.
And the NASDAQ, which obviously had a bigger play in the early November run, I think that could be a 10%er, and that anywhere from 8 to 10%. I think the semis could even go beyond 10%. Everybody ran that thing up, so I wouldn't be surprised if we get a little bigger hit in the NASDAQ. On the other hand, the Russell, which you would think would kind of be closer to the NASDAQ in terms of its downside, it doesn't look to me like it has a lot of downside left. It could come down to just under 2,200, 2,180, something like that. And again, I'm not a technician. I'm not a short-term trader, so these levels are not in my mind. Don't look at me as a short-term guy that gets these levels right. But just kind of guessing, I'd say that'd be about where we could go. And I still call for 2,900 on the upside in the Russell. So that's a nice move ahead.
Okay. Most technicians are going to say we had a breakout and we've had a breakout failure. So, I thought that we would pull back and hold, 6 months, 8 month breakout sure didn't mean much. I mean, a lot of people that got long in here, they're underwater now in Russell.
Yeah. I just don't agree. I do think this breakout in a lot of things, you had a quick run in the breakout.
Yeah.
And yes, you're probably going to undercut the highs that you broke out from, but not by a lot. I mean, I think you're just, as I said,
like 231 was like the breakout level on that one.
Right. But you've got so many people that went from bearish to bullish in a hurry. I just think you have to do something convincing. Like you say, if you just go back to the breakout point, people are gonna just jump right back on the melt up story. And I think you've got to wind out some of that. And it doesn't mean it's a long-lived correction. It just says, you probably do have another week or two to go.
Okay.
I
wanted to ask you, because when I first talked to you, you were talking 4,700, which you had as a long-standing target for a long time, right? And I was just thinking about some of my experiences, and then, I'm looking for something, and the longer it takes, the more, maybe I doubt it, or I change the targets. And I have found that my original thought is usually the best one, and I'm wondering what would tell you that there's not sharply higher levels left. Is there an area, if we breach it, that changes your mind for a melt up to 5,300?
It would take a pretty good break. I mean, if you saw the S&P down to 4,100 or something, I'd probably be turning south. But I don't expect that. You could even trade down under 4,300 and it wouldn't change my mind. But it's more, I'm actually, and think I might have posted something like this today or Friday, but I'm actually thinking my 5,300 on the S&P, which is my current level, is probably going to be proven low. I still think people use the term melt up, but don't really understand because I really was the one that started talking melt up before anybody. When I use the term melt up, it's going to be a stunner. I mean, it is not just, what we saw in early November. It's not just several days where it seems like it won't come down and everybody's jumping in. It's going to be a stunner. I just
Friday in reverse. We should have an update with the equivalent move, like a 2%, 3% update during the melt up.
You're going to have those. I'm not so worried about how it plays out day to day. My only point is that I think you're going to cover in 2 to 3 months' time. You could go to 6,000. I don't know whether it's 5,500 or 6,000. It's going to go vertical, and so picking a number is just total guesswork. But I look below the surface and see so many groups that are just breaking out. I'll talk about semis. Semis, obviously, were kind of laggards through the summer or early fall because of the supply chain issues, and all of a sudden, what happened in that early November period is people started hearing that some of that supply chain, particularly on chips, is being cleared up. And all of a sudden you saw the semis light fire and go.
Yeah.
I've had a 325 target on SMH. It got to 318 in this recent run.
Right.
I think I'm probably going to have to raise that target to 375, and I don't even know if that's the right number. So I mean, that's just, and that's a group that's already run. I look at materials. I keep saying you're going to have copper go to $6. You're going to have, lumber's already on its way to 1,000, I think, which has been my number. So you're going to have, a lot of the materials running. And I think it's a sign that you're going to have, the industrials running.
Is this because the Fed? Is this because the Fed's now has an excuse with Omicron to, kind of talk more dovish about the uncertainty of the virus and stretch out? Before this announcement, they were going to speed up the taper. Are they going to slow it down? Because it's not. You don't think what takes this market down and ends the bull market is going to be the virus. You think it's going to be monetary policy, right?
Well, I think it could be some of both, but I think monetary policy is the driver. I would say in terms of your question of the Fed, don't forget the Fed hasn't really changed anything. What has changed in the last few days is the narrative. QE. It's the narrative. It's not the Fed changing their mind every 10 seconds. It's the street changing their mind every 10 seconds. So Omicron on Friday, people jumped the gun, said, "Oh my God, here comes another strain. We're going to have another, lockdown." And the airlines are starting to cancel flights overseas, et cetera.
Right.
And everything tanked. Jay Powell's probably looking and saying, well, that takes some of the pressure off,
right?
In terms of how fast we have to taper. So, I think he's steady as she goes, and I don't, I get beat up on Twitter for supporting him, but I don't think people realize how important it is to have a steady hand at the Fed, not somebody that reacts to every trader that gets excited every other day. It's like the traders want to see everything change every 5 minutes. You want a Fed chairman who basically is looking, over the horizon, saying what's the sober way we want to approach this. And I think having him back in that seat and not Lyle Brainerd is a positive. I think his idea that taper is gradual and goes, so that if you play it out the way they're projecting, it's done by June. And then you can start talking about tightening if we need to, meaning in his mind, he's saying at that point, we'll consider how fast we have to tighten. So that's, for the market, once it gets comfortable that is the game plan, I think they're going to be bullish. And
so it's like a green light until June. So
no, because I'm not saying we will get to June. I'm saying in his mind today, if anything, Omicron keeps him on track, saying, well, I still got an inflation problem. That's not going away. But I don't know how much of that is transitory. I don't know how much of the other things we have to be concerned about, like a new strain and like, the economy, losing steam because of COVID. So I think it keeps him in a balanced view that says, I gotta taper, but I don't need to speed up that taper. And, by the end of the first quarter, he may have a different view. But I think for the next 2 to 3 months, Fed policy in Jay Powell's mind, he's the one that matters, is going to be steady as she goes. And so, again, the narrative that's on the street is what I'm shooting against, not Jay Powell. The narrative on the street that, we're going to have 3 rate hikes in 2022. I actually think that could happen. But between now and when that does happen, I think the street's narrative is going to go to the point of saying, we're not going to have rate hikes in 2022, or we're certainly not going to have 3. So it's more the narrative on the street that changes all the time.
Okay. All right. Well, this was an important change. And actually, we have people spying on you. Forex Gal, when you come in here, you end up with followers, right? And people started following you. And we were doing a F.A.C.E webinar one day, and Forex Gal said, David Hunter's bearish oil. And, was up here. And I went to your stream and saw you were talking about the oil cycle peaking, and that you thought the first wave would be low 70s, upper 60s. Great call, David. Nice.
Yeah, thanks. So, sometimes you get lucky, but that was what I saw, and I said again, I don't know if it was today or Friday, or over the weekend, but I said there's a my best guess right now would be that oil stays in a range between the low 60s and the mid 70s for the next 2 or 3 months. Doesn't have to, but I wouldn't be surprised if that's kind of the range. So there's some downside from Friday's lows, not a heck of a lot, and there's some upside, but not a heck of a lot. So oil becomes kind of the non-story, in my opinion, in what I think will be an inflation story because of things like copper. So that's and when I made this call of oil's, peaked for the cycle, most likely when it was 85.
Right.
I got beat up a lot because people said, you're not consistent. You're saying we're going to have an acceleration of inflation,
right?
But you're calling for lower oil prices. And I said, they don't all move together. You do have precedent where oil has not been part of the inflation story. And I think that's basically what the next 2 or 3 months is going to be.
Agricultural commodities, industrial commodities.
Yes. Yep.
So let me bring you back. Some nice calls there. Who's selling this gold, David? When we were on together, I showed this breakout, right? Yep. And then a few days later, one Fed governor made a statement about tapering or staying tight, and we negated the breakout in gold. And there is one hope for bulls, maybe around 1770, but I have a hard time wanting to be long the metals right now. Who keeps creating these aborted breakouts? Who do you think is selling? Who's selling gold, Dave?
Well, we didn't have a lot of help from the dollar in the last month, or the last.
Yeah, that's
weeks.
Part of it. Okay.
So I think that's a lot of it. And frankly, it's clearer on the silver chart than it is the gold chart. But this sell-off was very predictable, and it's an inverted head and shoulder ready to happen. I believe if people step back and understood and looked at the monthly, people forget where we were in early October. We're not even close to the lows of early October. So, we're at the end of November. So the monthly is right where it should be. And I think you're going to see, maybe by the end of the year, certainly by January, gold, up towards 2000, maybe above 2000, and silver up above 28 on its way to 30.
Okay. Well, like everything, time will tell. Do you like the miners?
Yes, very much so. To me, the downside here is virtually nil, and the upside's big. And again, I'm not big on what's the next month or two, so I don't want people thinking that's my call. My call is that certainly in the next 6 months, could be in the next 3 or 4, you could see gold at 2,500, you could see silver at 50. So I'm still as bullish as ever, more bullish than ever. I think the metals are doing just fine.
Okay, and I know you're looking for higher yields. We had this big pullback with risk off. Is this a selling opportunity in notes? And you're still looking for levels up there around 2 and then 250? Nothing's changed there?
Absolutely. Yeah, I view this as, I don't know what the next, if we get another, if we see another sell-off in equities like we saw, probably doesn't play out over a day. It's probably over, a week or two, as I said. But so I don't know if you'll get any more downward pressure in rates. But I think we're, all the risk reward is really skewed heavily to the upside on rates. I think we may have seen the lows at 240 at 143 back on November 9th when the CPI came out. That's kind of my best guess. It's possibly undercut that.
Big support was this range here, David, above like 138. This was a pretty big breakout level. So, worst case may be there.
I think the next few months, it's going to be heading towards 2%. And ultimately, maybe by the end of the first quarter, we could be at 2.5, certainly in the second quarter. So, and the 30-year, I think, can get up to 3% in that time. So, and I think something people are maybe just beginning to focus on is the fact that spreads are widening, junk's rolling over.
Right. Yeah.
The corporates are rolling over. I think there could be more story there for during this next week or two, where it looks to me like you can get some more weakness in the lesser quality, and spreads widen further.
It always starts there, doesn't it, David? And then there's some disintermediation where rates could go up and the market could fight it until it gets to some tipping point, and then it all falls apart, right? So,
on the other hand, because I'm looking for this big melt up, I don't think rates get in the way of that. Meaning, you may be up and down for a while until you get above 2%, and I don't think the move to 2% stops that melt up in any way. The last push where the Fed's involved and tightening could be the last 0.5% move up in the 10-year or something in that area.
Because these yields are going to move up without the Fed tightening just during a taper, right?
Yeah, no question. Bond market will push rates without the Fed.
You were a bond vigilante, I think, 30 years ago, weren't you?
Well, I'm certainly a big believer, and I've been on Twitter a lot saying bond vigilantes are in charge of rates, not the Fed.
Remember, we used to get on our horses and ride onto the floor of the Chicago Board of Trade and make all those guys. This market's bad.
I remember
hands
it well.
Out. Yeah.
People can talk about Jay Powell all they want, but there's that posse out there that will do the job. The bond vigilantes will ultimately determine where rates go.
Okay, David. And anything else you want to cover? I think we've covered the narrative, and it's a great update on the narrative. So really appreciate you being here with us. And someone asked me again what Dave H. Contrarian stands for, and I guessed once it was humble. How about honest? Dave, the honest contrarian who admits when he's wrong.
I'll take that one. Not everybody agrees. I admit it. I get beat up. People say, you never admit. I go, you got to let things play out. I'm not going to say I'm wrong while my thing's still in the works. So, but yeah, I'll take that one. That's a compliment.
You like that one? All right. So I crown the honest contrarian, David. David, thanks so much for being with us again today, and we'll keep in touch, and appreciate your conviction and some very nice calls about this correction coming, and that crude call was excellent. Because that was kind of a diversion from the everything goes up together.
Yeah, it sure was. I'll leave you with this one. I think.
All right.
I think the FANGs, in spite of rates maybe moving up here over the next few months, I think the FANGs could have a pretty good run in that melt up. So don't get all one sided and say, oh, it's just going to be cyclicals. I think you're going to see some some of the growth areas play too. It's going to be an interesting.
Yeah, I know you can't comment on individual issues, but they took a pretty good hit. But I know there are people talking 175 Apple. It's $20.
Yeah, I mean Apple looks good long term, meaning the next 3 to 6 months. All the ones within the FANG, I think, are likely to move. And I would even say, although, and again, I'm not saying from here, there's a correction still in those things left, but I would say even Kathy Wood's ARC looks like it could play once it may have to retest the lows of the last few months, but from there, I think you're going to see a pretty broad melt up. It's not going to be narrowly focused.
Okay, so something that lifts all boats and belong the world until the Fed really has to tighten, and that looks like that's still in the first quarter, or are we out to the second quarter before we see Powell raise rates?
I'm guessing second quarter, but time will tell. What I do feel is you could cover that entire move, whether it's 5,300, 5,500, 6,000. You could cover that entire move in 2 to 3 months. May not, may take a little longer, but melt ups mean vertical. People parabolic. I think are going to be parabolic.
Yeah. Okay. So everyone get out their parabola for this. And David, good hunting. Appreciate you being with us. Everyone, David Hunter, and you could follow him on Twitter at Dave H. Contrarian. Good hunting, buddy.
Hey, thanks, Dale. Have a nice Christmas season here.
You too, and we'll get back together in the spring. See how things turn out here.
That should be interesting.
All right. David Hunter, everyone. Thank you, David. And you guys can join the team in 13 minutes for the morning edge. Remember, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday. And people are saying thank you, David. So appreciate your giving spirit to share your ideas. And that's a wrap, everyone. Good hunting the rest of the day, and go join the team in 7 minutes on the morning edge. Adios.